All right. Settle in, crypto connoisseurs and curious newcomers alike. Welcome back to Bonnie's Life, your weekly oasis of intellectual insight in the often chaotic desert of the crypto markets. I'm Bonnie, and for the next 30 minutes or so, we're going to dissect the rather eventful last 3 days in the cryptosphere. This episode outlines the observed and potential impacts of key global events on both traditional financial markets and the cryptocurrency market during the period of May 12th, 2025 to May 14th, 2025. This synthesis is based on research documented in Fundamental Analysis, May 12th to 14th. First, U.S. economic data, anticipation, and Federal Reserve commentary. Event market anticipation of U.S. Consumer Price Index, CPI data, and active commentary from the Federal Reserve Chair regarding monetary policy. Impact on traditional markets. Equities, increased caution and potential volatility. Markets tend to trade sideways or slightly down in anticipation of crucial inflation data, as it heavily influences Fed rate decisions. Hawkish Fed comments could pressure growth stocks, while dovish tones could provide a lift. Bonds. U.S. Treasury yields would likely react significantly to Fed comments and CPI expectations. Anticipation of higher inflation or hawkishness could push yields up, bond prices down. Forex. The US dollar DXY was reported to be showing weakness mood-rex. This could be due to markets pricing in a less aggressive Fed or a flight to other currencies. Assets. Typically, anticipation of hawkish Fed policy strengthens the USD. Impact on crypto markets. Crypto markets, often behaving as high beta risk assets, would mirror the caution in equities. Heightened volatility is common. A weaker DXY is generally bullish for Bitcoin and other cryptocurrencies, as it makes them relatively cheaper for investors holding other fiat currencies and can signal a broader risk-on sentiment. Direct Fed comments on inflation or future rate paths would cause significant crypto price swings similar to their effect on tech stocks. Second, U.S.-China trade relations sentiment. Event. Comments from former President Trump regarding U.S.-China trade, Binance Square, May 13th, and earlier reports of eased trade tensions leading to a Bitcoin market recovery, BitGet News, May 12th. Impact on traditional markets. Equities. Positive developments or even hints of easing trade tensions between the US and China typically boost global equity markets, particularly export-oriented companies and those with significant international supply chains. Negative comments or renewed tensions would have the opposite effect. Commodities. Industrial commodities might see price increases on positive trade news due to expectations of increased demand. Impact on crypto markets. Improved geopolitical sentiment, such as eased trade wars, often translates to a risk-on environment, benefiting cryptocurrencies. The reported Bitcoin recovery linked to eased tensions supports this. Conversely, escalating trade disputes could lead to a flight to safety, potentially pressuring crypto prices initially, though some argue Bitcoin could act as a hedge in extreme scenarios, less evident in short-term reactions to trade news. 3. Regulatory landscape and government actions. Events. U.S. lawmakers urging Treasury to reverse certain crypto tax policies. Decrypt, May 14th. French Interior Minister meeting with crypto firms due to security concerns. Decrypt, May 14th. Xcred executives pleading guilty to $150 million crypto fraud. Decrypt, May 14th. Cartel bosses charged with narco-terrorism with links to crypto laundering. Decrypt, May 14th. Impact on traditional markets. Generally minimal direct impact from crypto-specific regulatory news, unless it signals broader systemic risks or involves major financial institutions that are also part of the traditional system. News of large-scale fraud or illicit use might slightly tarnish the reputation of emerging technologies generally, but is unlikely to move major traditional market indices. Impact on crypto markets. Tax policy discussions, positive news, like calls to reverse unfavorable tax policies, can be bullish, suggesting a more favorable operating environment and potentially encouraging institutional adoption. Negative tax news would be bearish. Government meetings, France, can be a double-edged sword. Engagement with governments is positive for legitimacy, but if driven by security concerns like kidnappings, it highlights risks and could lead to stricter, albeit necessary, regulations. Fraud cases, Cred Inc. negative for sentiment, reinforces the Wild West image for some investors and can lead to calls for more stringent investor protection regulations. This can cause short-term price dips or increased caution, especially for platforms perceived as similar or less regulated. Illicit use, cartel laundering, highly negative for public perception and can trigger stricter AML, CFT regulations globally. This can create headwinds for adoption and increase compliance costs for crypto businesses. Fourth, institutional adoption and investment news. Events. MicroStrategy Bitcoin purchase. Madrax, May 13th to 14th. Standard Chartered and Falconex deal for institutional crypto services. Decrypt, May 14th. Impact on traditional markets. MicroStrategy news is specific to its stock, MSTR, but can also slightly boost a sentiment in the tech sector or for companies with Bitcoin on their balance sheets. Deals like Standard Chartered Falconex show traditional finance deepening its involvement, which can be seen as a long-term positive for the financial sector embracing new technologies, but immediate broad market impact is limited. Impact on crypto markets. MicroStrategy purchase. Strongly bullish for Bitcoin and the broader crypto market. It signals continued institutional conviction in Bitcoin as a treasury asset and can trigger copycat investments or boost overall market confidence. Standard Chartered / Falconex deal, bullish, indicates growing infrastructure and accessibility for institutional investors to enter the crypto market, potentially leading to increased capital inflows and market maturity. Summary of interplay. During May 12th to 14th, 2025, the crypto market was likely influenced by a mix of macroeconomic caution, CPI anticipation, Fed speak, and crypto-specific developments. While DXY weakness and positive institutional news provided tailwinds, regulatory headlines, fraud, illicit use could have tempered enthusiasm. The market was navigating global economic signals while also reacting strongly to internal industry news regarding adoption and regulation. Traditional markets were primarily focused on the macroeconomic picture, with crypto-specific news having less direct influence. And that, my friends, is our crypto catch-up for May 12th to 14th, 2025. I hope you found it as intellectually stimulating to watch as I did to prepare. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next deep dive. Drop your thoughts, questions, and even your own well-reasoned analysis in the comments below. I do read them, especially the witty ones. Until next time, stay curious, stay critical, and may your trades be ever in your favor after extensive research, of course. This is Bonnie, signing off from Bonnie's Life.